It's a pleasure to have this interview with you, Mr. Nati. Obviously, the core of our discussion will be about the tokenization of real-world assets. So let's start about talking about what is, let's say, the status of the market right now, of the market of the tokenized real-world assets, and especially for the investment products, stocks, bonds.
Great. So I think if you look back what happened over the last 10, 12 years, there is a new asset class called cryptos, and the crypto industry has been the most talked about industry. But if you look at the most talked about industry over the last 12 years, which is called Bitcoins and Ethereums and Litecoins and Ripples and all of those things combined, the total market capitalization of all of those crypto industries and all the crypto assets combined is only $3 trillion. When you compare that to the total AUM in the world, which is about $600 trillion. Now we're talking about an asset that's pretty much everyone knows about. A 10-year-old guy, kid knows about Bitcoin today. And why is there such a big disparity between the total valuation or the total capitalization of this asset versus the others? The difference is that crypto has taught us that there could be something called a technical finality, where you settle an instrument which could not be spent twice. It would be, if I send you a Bitcoin, it's yours, it's in your address. What it has not done so far, or until very recently, is does it represent an actual underlying asset? So if I'm sending you 1 square feet of an apartment in Nicosia on a token, do you actually legally own that? The total AUM that I spoke about before, about $600 trillion that's out there in the world, 1/3 of that is sitting in stock markets and financial instruments. And that is something, that is sort of inevitable. We see a lot of crypto industries now moving into stock tokenizations and what's happening in stock tokenizations. And that's really where I see the big shift is happening in the brokerage industry in general across the world.
So my understanding is that the market is not yet mature, but it is evolving. Do you feel that, is there something that is missing from the market in order to evolve faster? Or?
Two aspects of market, I believe, that would make it grow faster. The first one is regulatory, clarity on how these are treated. Regulation has been very cohesive across the world in how they view these assets. So regulator says if the underlying asset is behaving like a payment instrument, you are a PSP and you're acting as a payment service provider. If the underlying asset behaves like it's a stock or a security, you're a broker and you're acting as an intermediary. With that out of the way now, what's more important is to bring these legal finalities and technical finalities together, which is happening now, where people can actually safely feel, if I bought a tokenized Apple, I actually hold an Apple stock. And I can convert that into an Apple stock at will. I can transfer that to my custodian whenever I want. And I think this is what's paving way for this $3 trillion industry to actually become $600 trillion industry.
I see that there is a lack of, let's say, there is plenty of platforms that can do tokenization in real-world assets and also in financial instruments, but I don't see that many holistic approaches. I mean, obviously, as you said, certain instruments, when set it up like shares, they have to be traded by investment firms. So I understand that there is a lot of technology platforms that can do the tokenization and all this, but without doing the step further. Is that true? I mean,
yeah, most of it. So if you look at it, who is tokenizing today? Who's issuing a token, on Ethereum today? Someone goes on Ethereum, issues an L2 token and calls it, this is an Apple token. And then people start believing it's an Apple token and they all start buying and selling it as if the price of Apple is going up, my token's going up. What happens when that issuer disappears? What happens if that issuer suddenly feels like, I've minted enough Apple tokens, I've got the money, I'm going to go away. That is where the fear is, and that is why there's such a big disparity between the actual, total wealth in the world in stock market versus the total number of tokens issued in those stock markets. And that is, I think, as that problem gets solved, which Blockmiss is solving now, you have to bring together regulations, you have to bring together rails from across the world, you have to bring together the technology along with it. A marriage of these two together is what creates a real tokenization where you have legal right on the underlying and not just a synthetic right on the underlying.
Okay. Let's go to the higher vision for the market. Right now, the volumes maybe are not that big, but the market is evolving with a very fast pace. What is your expectations or the expectation of the market about the market of the tokenized investment instruments, let's say in 3 years from now?
I believe JP Morgan is already tokenizing it. BlackRock is already tokenizing it. McKinsey report recently published that they expect about $30 trillion to be tokenized in financial instruments by 2030. If you're looking at that kind of tokenization happening, a $30 trillion financial market coming onto a tokenized world, that's 10 times the current crypto market. If I look at what's happening with the crypto brokers, if I look at what's currently happening with crypto industry and the trading volumes and the transactions that's happening in the crypto world, and if I say that whole asset base is going to get multiplied by 10, that's the kind of growth we expect to come into the tokenized asset transactions.
It seems that the market will be huge, but let's go to the core of our discussion. How a broker can monetize this? So what is the revenue potential for a broker to, let's say, start putting this investment product, this tokenized investment product, in the product palette it offers to its end clients?
There are 3 major ways that a broker can do it. As of today, if you look at an average broker, there are 2 ways brokers operate. One is when a client is buying or selling an instrument from a broker, he basically connects the client to an STP venue or to an exchange or to another LP. And then the other one is a client is trading and the broker maintains his own book and he basically matches and offloads based on the risk appetite of the broker. Same thing happens in tokenization and tokenizing world. A broker could go to someone who's tokenizing it and who's providing a liquidity for it. So he could become, the job of a broker is to provide access to the market. So he could become that access point and connect the different LPs who are offering these tokenized stocks into the market. Or he could become an issuer himself and say that I'm going to issue Apple stocks and maintain the treasury, and I'm going to become a market maker and issuer on the Apple stock. Those are 2 different ways that brokers will evolve to provide this service. Brokers are already working in the same ecosystem. They are already operating with all the technology and all the connections and all the vendors that they have in place. It's just a matter of getting comfortable by saying that, yes, we used to offer stocks, and then we started offering options, then we started offering futures, then we started offering, Asian options, and maybe then we started offering cryptos. Now we have to offer tokenized stocks because the market is moving in that direction.
I have the sense that most of the brokers, talking about the CFD brokers, that they are afraid that this product will cannibalize the CFD business. So they are like a little bit hesitated in adopting this instrument. Is that true? Maybe it's a wrong impression that I do have.
Look at last 50, 60 years what happened. There were certain type of brokers that existed before 1987. Very simple brokers that supported investment banks to be able to offload when there's an IPO. They need someone to have a secondary market. That changed, and certainly we saw that there was a big rally in the market, and the brokers started charging percentage thing. So if you look at the history of what happened, by 2000 these brokers were obsolete. By 2010, the brokers, the neo brokers were obsolete because they were zero cost brokers that came up. So I believe it's an evolution process. People who evolve are going to be at the forefront. They're going to maybe capture the new Gen Z investors, which is the largest investor base in the world right now, because they are more comfortable with tokenized and crypto assets. They would capture that. And some of the brokers might choose to go obsolete because change is difficult.
I think you gave me a very good kick on my next question. Who do you feel that will be the winners of this market, again, in a 3-year or 5-year term?
Everyone who evolves, everyone who innovates, stays up with the trend, understands what the client is asking for, understand what the world is asking for as of right now. If your clients are asking for tokenized stocks and you're selling them CFD, you can't sell. The job of a broker is to provide access. Brokers revolutionized by democratizing the stock market and connecting different stock markets in the world. That's a job that was done 20 years ago. As new technology comes in, I mean, think about this. Maybe a few years from now, most of the transactions might happen using AI, and AIs will be trading. They will be much more comfortable on a programmable form of stock than on a orthodox type of stock. So you would see an automated transfer happening because AIs are investing in behalf of their clients. Today, an average stock takes about T+2 days to settle, to clear, to go through custodian, to go through all the different intermediaries over there. But when the same stock is tokenized on blockchain, it takes 6 seconds. The entire clearing, custody, and all of those processes happen in 6 seconds. It is a natural evolution. So the brokers who will tend to lose are typically the ones in any industry. Anyone who does not stay abreast of the trend or innovate enough is going to be taken over by people or the companies who will innovate. So that's how I see it.
Yesterday I read an article that some major banks are create a syndicate vehicle to tokenize term deposits, which seems that they are in the market already. But do you feel that maybe banks again will move to capture all the profit or all the market? Banks already have access to the investment products and they are acting like investment firms. For example, in some countries, they are considered the prime, let's say, investment product offerings. Do you feel that maybe banks again will move faster and they will?
I mean, banks traditionally have the largest distribution network, but they're traditionally the slowest to move, the slowest to change, the slowest to evolve. And it encourages me that if a bank feels like he has to tokenize the treasuries, imagine what kind of a frenzy is going on in fintechs, who are at the forefront, who traditionally have always led those slightly riskier but more innovative approach, and they've worked as shadow banks with these banks doing banking as a service and things like that. It just says that now even banks and large organizations like BlackRock and JP Morgan, even they cannot ignore the trend. The trend is very large. The question is, will the people who have been at the forefront of innovation for, let's say, a trading industry, are there enough current incumbents who are going to compete on the same technology with the new age brokers and the new age client Gen Z for the product that they're asking for?
So as we see many traditional and slow players to go in this market, what is and because you are really a lot of time in this market in a very, very high level, what is your suggestion to a CFD broker about how they can capture the market with a tokenized investment product?
It's it's inevitable. If the clients are going to come and ask for tokenized stocks, they will have to provide that. For a CFD broker to offer tokenized stocks, picking up a technology provider who can help them tokenize stocks, identifying a regulated partner who can help them connect the rails to the technology. In some cases, brokers might have those rails or those approvals themselves. In some cases, blockmates can help them pick up those rails. So my suggestion to broker is actually to just go and speak to the technology provider. The technology is already there. It's very simplified. It's much easier to tokenize a stock today than to maybe set up a new server for MT4 and MT5. It's that simple. the inhibition is to make the first move, to go and ask the question, to go and see, do I want to do this? So I believe the technology is there. It's very simplified. The rails are there. Blockmaze has connected all the rails across the world for that reason. So it's basically just taking that first step to say, I want to start doing it. And not do it when clients start asking for it, because by that time the competition is going to be much more stiff than what it is right now. Right now it is much like a white space. Whoever picks it up is probably going to earn the most of the market. So I would say they should move fast on it. They should try to capture this market. Crypto industry is already tokenizing stocks. Binance issued 7,000 tokenized stocks. Kraken issued stocks. Xstock is issuing stocks, and now they're coming into prop trading, and they're coming into brokerage and CFD brokerage and stuff like that. It's only a matter of time because client is asking for it. If brokers don't innovate fast enough, that industry is going to come over and take over this industry. Sorry.
Okay.
Afterwards, yeah.
Okay, thank you very much. I think we have a few minutes and it will be a good opportunity to give the opportunity to the audience to have some questions. So is there someone that would like to make a question?
What's your thoughts about the fact that a lot of the brokers are looking at the industry and it's still quite fragmented? So you need to take one piece of the puzzle from one provider, another one from a different provider. What's your thought about that and how Blockmaze can address it?
I think with every product type or every innovation that comes up, you will see you always see fragmentation initially because people have not gained enough expertise or things have not come, they have not matured enough. And that's also a sign of why there is so much opportunity right now to tokenize and get into tokenized market. Blockmaze is licensed. It's probably one of the largest ecosystem of any blockchain licensed across the world. Blockmaze brings together licenses across North America, Europe, Africa, GCC, South Asian continent, Australia, all of those places. It brings all the rails together, it brings the technology together, it brings the expertise over the last 15 years of building these rails. That really makes it as simple as going to any LP and asking for your technology, rails, and expertise and everything just out of a box. But being fragmented tells you that this is the stage at which people can get into the market and capture the market. Bitcoin was $200 when the crypto market was fragmented. Now it's not fragmented; it's $60,000. So you'd rather go in at 200 than at 60,000. That's how I see it.
Please.
A bit quick. Just an explanation in terms of the difference of the ownership of the tokenized stock, for instance. For instance, for Blockmaze, if I don't understand well, it's the ownership belongs to the end user of the tokenized. And that difference is something that I think it's very important to understand. Can you just give your thoughts on that?
May I answer on that?
Absolutely.
So the way we do the tokenization at Blockmaze, it depends on how the brokers want us to do. We can do it with a way that it is really a real stock. I will explain you how exactly. And we can do it with a way that replicates a CFD or a tracker certificate, a derivative actually. So the way, this is something that the majority of the participants in the market, they do the tokenization with a way that replicates a financial derivative. The way we are doing it, it's like we buy the real stocks on the stock exchange. We having them in custody, third-party custodian, regulated custodian, and we mine the tokens based on specific number of the shares. Let's say We buy 100 shares from Amazon. We put it on custody, on the third-party custodian. We mint tokens on these 100 shares, and each one token holder is actually holding one of the shares in custody. What is the difference between the other model is that we pass through all the rights, the dividend rights, the shareholder rights, and once the client wants to sell the token, we burn the token and we sell the share to the market. If the market is closed the time that the client requests to sell, we buy it as a liquidity provider and we sold to the market when the market opens. So in any case, the client can transact with the real stock in any time he wishes with instant settlement, and we do all the other stuff behind.
Big difference from the user perspective in terms like, do you own the contract or you own the
There is a realistic difference. The one is a transferable security and the other is a derivative. And what do I mean transferable security is the definition of the product, of course, but if a client holding the token, maybe he can request that I don't want to sell, I want to transfer this Amazon share to my brokerage account in that broker. I can do it. I will transfer this specific share connected to the token to his brokerage account. And this is very, very important because you hold the title. You don't hold a certificate or a derivative.
Thank you. That was exactly what I wanted.
Thank you very much. I think we are run out of time. It was my pleasure to talk with you. Thank you very much, Nati. Thank you very much,
Perfect.
everyone.
Thank you so much.